Yeah, I mean, that's what I'm hoping to cover. As I say, the myth busting I think is really key, and some of the bits and pieces you might want to do within your business to adapt and thrive. And I think, as was mentioned earlier, absolutely, where people want to cut back on things like marketing, it's absolutely the wrong call, and we'll touch on some of that. Headlines, busy slide, but actually the headlines are busy when it comes to this stuff. What we see time and time again is headlines: Marks and Spencer store closures, strikes, job losses, made on the brink of collapse have since collapsed. Lots of challenges out there. Lots of businesses putting their prices up. We're probably at the point now where businesses can't put the prices up much more. Two reasons to that, which are fairly obvious. One, sales are starting to fall off. That's what happens in a recession. You can put your prices up as much as you like, but people will stop buying. And the other element is just the competition. We're seeing other people making different moves, and that's going to be a challenge. But we'll come back to that shortly. We'll skip that one. And some of this stuff's obvious, but it's still worth touching on nevertheless. So the Bank of England produced some fantastic insight into the economy, what's happening. This might be obvious, but this is the level of uncertainty, and they use this as a driver for what's happening in the world as we see it. So business uncertainty at the point this was published, which was only about 3 weeks ago. What is the level of uncertainty? And it doesn't really matter the percentage, but what you see is, back towards the COVID time, businesses are heading to that level of uncertainty. And unfortunately, it becomes a spiraling effect of recession. Businesses are then worried about recessions. They stop spending money and investing in things, which then leads to more drivers of recession. So we'll touch on some of those things as we go through. And as I say, I'll go through a reasonable pace to make sure we've got time for questions. World Uncertainty Index, similar sort of thing. What I like about this one in particular is the fact that most of the challenges we now have is driven by the invasion of Ukraine. Very little of the challenges facing the UK economy is internally driven. Ignoring that few weeks challenge of Liz Truss, the rest of the time, the bulk of the issues we see in the UK is driven by the invasion of Ukraine. And we're in a really interesting place in the UK that if you look in America, they're less impacted because energy prices have not particularly moved in America, so they're okay. What you see in Europe is energy prices really hit hard, and we're kind of in between of that. And the same with food. Food was dramatically hit by the invasion of Ukraine. Most wheat goods come from Russia/Ukraine, and a whole lot of other things, and that's really pushed the prices up. And the UK were net importers, massive net importers. So again, inflation's really hit us. So that's some of the stats, and you can see actually, we're really pushed hard on some of these things. Inflation, always an interesting one. The October figures were released a week or so ago. Inflation hit 11.1%, which was kind of as expected. That would have been about 13% had we not have had the government's energy cap, both for businesses and individuals. So that energy cap that's really helped pull back the rate of energy prices, albeit many of us have felt the pain. And we heard earlier on from a colleague who manages and deals with energy, and I'm sure they'll see that time and time again. But the cap has helped slow inflation, albeit it doesn't feel it. So say inflation 11.1%, and we think that's actually the peak of inflation. So that's the positive, and that's what you see in this chart towards the right-hand side. You see the shaded area, the projection bit. We're starting to see inflation just start to fall back, which is a positive, and that is where one of the benefits of recession tends to be the cooling down of inflation. So inflation will fall. Inflation, this next chart shows it better. Good. Now, inflation, say September was 10.1, October 11.1. Then we're starting to see it fall back. it does take a little bit of time, but that fallback starts next year. Next year should end by about 5.5% on inflation, then down to around about the target of 2%. And then by the end of 2025, actually inflation is going to hit almost zero. So we're in a really interesting time. In some ways, this is probably the biggest risk to recession. So we'll talk about recession shortly. The length of recession will be absolutely linked to inflation. So for some reason, hopefully not, there's another shock somewhere else in the world which pushes inflation up, that will extend the length of time of recession. And I'll talk to you about recession very shortly, but inflation cooling and coming down is a real positive step. One of the things I would say, and it's really important, inflation is a kind of a year versus year comparison. So September 22 that you can see on the chart, that 10.1% is compared to September 21. So although we're seeing inflation flatten, what we're not seeing is prices go negative. So overall prices will slow in growth, possibly to almost 0% by 2025, but we're not going to see prices fall. Now, of course, some prices will fall, but on average, prices are not going to go negative. So you're still paying a higher price for goods and services than you would have been a year and a half ago. And that's really important. It's the growth level that slows. I can share the charts, so I don't think probably many of you are that bothered about shipping costs, so we'll skip that one, although it's a good driver of what's happening in the economy. Interest rates have jumped up. I like this chart that shows effectively over the last 20 years what's happened to inflation. The financial crisis, the key difference to today and effectively the financial crisis, that the financial crisis really needed interest rates to go quite high to slow the pain of the economy. It's a slower but quite steep climb, and so we're at 3% at the moment. The view is interest rates will probably get to 4.5%, and then over time start to slow down. The only caveat to that is if for some reason inflation sticks at high level in 5.5%, into next year, then rates will increase, but they're not going as high as were feared. Previously, only a month or so ago, the fear was interest rates would probably go up to about 5%, back towards those levels of the financial crisis. We think 4.5% will be where it peaks, but that's still quite a jump from 3%. Impacts obviously those people paying mortgages. And for all of you business owners, particularly if you've got floating, so not fixed levels of debt in the business, it really hits hard very quickly. And also it's one of the impacts of businesses, confidence low, they're not investing. Generally to invest, they have to borrow. Of course, you pay interest. This is the bank rate. Obviously, the rate you actually pay is higher than that. So, that's a challenge as well. Before we get to what many of you will recognise, the fall in household income. I won't dramatically spend time on this other than to say this is the reason we are in recession. The fact that ultimately the top line is post-tax household income is not growing at the same level as prices, which means households have got less to spend. And that's now starting to eat into a negative position, as you can see from the white diamonds, which mean households are cutting back on spend. Because of that, it's driving recession. Financial crisis and other challenges and recessions have all been down to different reasons. This is very heavily driven by household incomes and households cutting back and the impact we see as a result of that. And I was going to say I like this chart. It's not a case of it being positive, but what it does show is household sales. We're now at 100. At the very end was kind of the September pre-COVID, when the world was all as normal as possible. And we've seen peaks and troughs because of COVID. We're now starting to see retail sales fall below that index level. And bearing in mind, inflation's pushed prices up by probably 15% by that time. This is a real challenge, and this is the kind of start of recession ultimately, and the fact that sales are starting to fall. this is the chart that shows recession has begun. I was talking to the Bank of England just this morning, actually, and they say, look, all of these numbers are relatively small and can be amended, but what this is showing, sorry, the diamond lines is negative growth in the economy, which means 2 quarters of negative growth together equals recession. So the view is recession started in the UK back in Q3 and will stay that way. The Bank of England's view is recession will be with us for 24 months. So 6 months of this year, whole of next year, and then about half of 2024. The ultimate fall of GDP, gross domestic product, in the economy next year is about 2%, which is relatively shallow, and I'll show you a chart on that shortly. In 2024, we'll see quite marginal growth by the end of that period, and 2025, slow and steady growth. And that's really important because, recessions, and the headlines were, this is the worst ever and longest recession. It's the longest, but it's by far one of the shallowest recessions. And let me show you a chart that shows that. And again, another one of my favorite charts. You might think all of them are my favorites because I put them in. But so this shows UK quarterly economic growth from 1955. And what is really interesting in this, the blue line's a positive economic growth. And it doesn't take a lot to spot that there's far more periods of positive economic growth than there is negatives. So all of the negatives, some of the recessions we've seen, and some of the deeper recessions, go quite deep. We're absolutely not going to see a deep recession this time. I'll skip that one because I don't think that's a helpful one. And these recession truths I find really helpful. And we'll come on to how you might respond to that shortly. So we are in recession. There have been 7 major recessions since the 1920s, all driven by their own factors, and they are truly all different factors: Gulf War, energy crisis, financial crash, COVID, possibly the Ukraine stroke energy, and all of the other things of this one. They are all different and very difficult to compare. Typically, if there is such a thing, a recession lasts about 18 months. And the headlines of the longest one is the fact that this we think will last about 24 months. So that's where the big headlines of the biggest recession. So it's the longest by about 6 months. And that can change dramatically. What happens in April to how the government will support businesses around their energy, what happens to energy price caps post sort of October of next year for domestic customers. All of this plays dramatically into recession and inflation. So things can change. This is not set in stone. It's purely a forecast. As I say, it's expected to be the longest and last until midway through 2024. And the key thing for businesses, effectively, and we're already 5 months into recession and everyone survived this long. So the key thing is, what do you need to do in your business to make sure you can survive between today and effectively 19 months' time to get you to the end of recession? What typically happens after recession is then much more growth. As I said, at the peak, we're expected to see a fall of GDP of about 1.9%, which is not bad compared to GDP in the financial crisis of about 7%, a much deeper issue. Unemployment is expected to effectively double, 3.7% now, rise to about 6.5%. It's going to be very interesting how that plays out because, as all of you will recognise, businesses have really struggled to recruit staff. So the last thing they want to do now, going into recession, is to lose the good staff they've struggled to get in the first place. So this will take some time to start building unemployment. It'll be really interesting to see how it does play out. The key thing, as you saw from the charts at the top, each recession is followed by really long periods of economic growth. So, 24 months of pain, followed by many months, years, probably. It's 2008 financial sort of crash, the last major recession, ignoring COVID. you effectively probably got 10 to 12 years of positive growth. So it is a very short item that we've got to fight and get through. It does heighten risk for businesses. There's no getting away that sales will fall, profits will fall, cash availability will be more difficult, particularly if you have a financial challenge. Trying to get access to cash will be more difficult. So it is a risky time. I can't pretend it's not. But it is also a good time to acquire resources. We see sometimes that's buying a competitor in full. Sometimes that's recruiting additional staff. Doing the opposite of what people might do, as we heard about the marketing. Market more, don't market less. Do something slightly different to prepare your business for the future, because it does present an opportunity. And there's lots of research that I've looked at, reviewed, that shows that those businesses that responded to the warning signs of recession and made the right choices, they absolutely did really well as a result. So let's quick time check. Let's see how you might want to respond within your business. So the first half of the session is very much of the challenges of recession and the sort of myth busting of what it means. The next half is very much about what you might want to do. Resetting strategic priorities. It might sound simple, but the plan you had for your business, which I hope all of you have got a plan, the plan you had has now got a bump in the road. And that bump in the road is a 24-month recession. That doesn't mean your plan, in 5 years' time isn't the right plan. But as at today, the plan you're going to deliver might need a review. And the plan and the choices you make as part of the recession, and some of the comments there absolutely are the right things. And the bit in bold, which I find really important from the research, is absolutely, if you switch to survival mode and make really deep cuts and react defensively, you're just going to react too late to make the wrong decisions. So what might some of those right decisions look like? And I'll pick some of these. I won't talk through all of them. This is a perfect time to do a root and branch review of your business. Recession is a good time to just stop, think about your strategy, structure, processes, people. What do you want the business to look like? Is it in the right direction? Is it got the right structure? Start making some decisions. And this is not about knee-jerk decisions. This is about making some good plans that take your business forward. I say they're cost-cutting and strategic choice. It's not about slashing everything you do, and there is a consequence to every decision. It's about what you can do to move your business forward. Another key thing to think about is, what will recession mean for your customers? Will they struggle to pay some of your bills? Might you lose some of your customers that owe you money? What would you do in that situation? That very much links then to scenario planning, which was key as part of the response to COVID, to be honest. But we're now further on into recession about what can you do within your business to really get the plan, build it, be flexible, and then start to think about at the end of that 24 months, what do you need to do for your business to invest in recovery? And how do you start doing some of that now? And one of the fascinating things we see time and time again is people panic. And what I'm trying to say to you now is, it's not about panicking. This is a reality check of what recession means and how you might want to respond. And one of the key things there is, if your business is founded upon something in particular, and I link this to, if your business is all about being sustainable, it's the key part of your brand. What you don't want to then do is have a knee-jerk panic and stop doing that because of recession. You've got to remember what your business stands for. And a little example of that from one of our clients. And yes, it's Clinton, so it's a different scale, but you all know the company. And one of the things we helped them to achieve was, they were very keen on designing and getting access to new carrier bags. As simple as that sounds, carrier bags that are made of recyclable material and are mostly recycled. And we delivered that. We're able to do that, get them whole new carrier bags at every single store, Every time you walk in, you'll have got one of these over the last few months. And by doing that alone, they save nearly 40% on the cost of that. So I guess the key thing from that a little story is you can save money and still take forward what's really key to your business if you get the balance right. And there's a great example of that. And I say it's a brand you will recognize. It's a good example of sticking to what you hold dear, because that's really important. It's a 24-month bump in the road, not a 10-year bump in the road, and that's really key. The second one, and probably the I would say the most important, but being operationally efficient. And you need to. So we saw the response from the airports after COVID or during COVID was to get rid of all of their staff. And by getting rid of all of their staff, it meant in the summer they couldn't cope when demand returned. And knee-jerk responses of let's just get rid of all of our staff is not what you should do. What they should have done is taken the time to say, how can we be more efficient? Which might mean they needed a few less staff, but focusing on operational efficiency. Now, I'm a CFO by trade, and normally at this point, people tell me we've done everything you can possibly imagine. We're the most efficient business ever. We've done everything we can on our costs, and it's just not true. And I share my story from Mr. Henry Ford. And if you believe you can't be any more efficient, then absolutely you're going to be spot on. The story has it. He offered £25,000 back in the 30s to anyone who could save one nut and one bolt from every car made. That he was obsessive by taking cost out of the production process, but also doing it in a way that was safe. So effectively, the first driver of sort of quality, productivity, efficiency all together was back in the 30s, and he was obsessive. And what I would say to you is, if you take nothing away from this session, please take away that there is money in your overheads that you can go after. There is ways you can become more efficient via process improvement, by looking at what the best in your industry does. How can you copy what they can do? Because I'll tell you now, if you can get that right, you'll be in a really strong place for when sales return post recession to be really efficient. And obviously, being more efficient then, as more sales come through, that's a great position to be in. Let's say operational efficiency is absolutely key. And the fairly obvious things I've got there. Acting fast and decisively is really key. If you think, we're gonna look at how we can be more efficient, however you wish to do that in your business, don't leave it 10 months to get around to doing it. You must do it at the very start of a recession, which is now. Over the next 3 to 4 months, you must be looking at some of this stuff. The flip side there is don't cut things that are vital for your delivering your plans. We heard at the start about marketing. Don't start cutting back something that really you built your reputation, your brand, time and time again. This is not the time to start slashing and burning. It's the time to look at operational efficiency. Do costs make sense from a non-financial point of view? It's a bit like the airports and the people. You kind of think, as a CFO, how do I save money? I'll get rid of all of the staff. Brilliant. Tick, done. My work is done. Had they had a conversation that says, but let's ignore the money for now. What would it mean in terms of our people, our ability to recruit again, our ability to respond to growth? Would it have made sense? And that'd be a big factor cross. So, just going down the financial lens is not always the right element. I'll pick on energy costs because we mentioned it earlier on. Energy costs, there is not a great market at the moment. The best thing you can do, and something the government's pushing, and we imagine we'll see more about, energy utilization. If you can get your consumption right, you'll be able to save somewhere between 10 and 25% relatively easily within your business. If you get, we find time and time again with our clients, holiday parks, some of my clients, they leave the swimming pool seated all night when no one's in them. Do an energy review and you can spot these sort of things, machinery that's left on overnight. If you can cut some of those costs out, you will bring your bills down dramatically on energy. It's a real key one. If you've got a number of rooms, number of buildings, that's the place to focus on. It really will make a difference. It's a good time to get rid of loss-making customers as well. Some of those paying customers that you know are painful, are effectively costing you money, get rid of them. This is the perfect time as part of your recession planning time. Get rid of those customers because they'll probably be happy to pay more to stay with you. And then if that's the case, then maybe you consider that. But I say that's what I would focus on. I'll move quickly to the third element, and then we'll stop and see if we've got any questions. Let's skip that. And then the final one of the three responses, business resilience and agility. The resilience is really key, and we've seen that through COVID. You know, how can you be resilient within your business? How can you respond quickly? And you know, some of those headlines very much there about being agile. If you make a change and it doesn't work, change it back. Be able and willing to move. As if you get stuck in the wrong plan, it really won't help. And these are some of the ones, and I guess we've talked a little bit about pushing through change. Really key. Build trust with your suppliers. You know, time and time again, that's something I see when I work with our clients, that they don't always have a very good relationship with suppliers. It might be not paid a few bills, etc., etc. And there is something about building trust with your key suppliers. However you best do that, build that relationship, because you might need their support, particularly if you do have a few bumps in the road going forward. Depends on the size of your business. Silos is a really interesting one, and time again, some of our larger clients, what I see in kind of some odd decisions that are made on one site that suits them, but it goes against what suits the business. And trying to remove some of them spend silos, try and consolidate spend is absolutely right. In terms of being agile, being ready to seize opportunities is a real key one. Opportunities will come. There will be rents will be cheaper, assets will be cheaper. If you've got cash available, that's great. Think really hard about how you might want to deploy, because it's the perfect time now to respond to the challenges and everything else that we can see. And I guess finally then, productivity, so it fits with efficiency. Look at your business and really work hard to create financial headroom. I'm going to stop at that point. You've kind of had a bit of a whistle stop tour of something that generally lasts, could last days, but generally is an hour presentation. But I hope that's helped in terms of a bit of a navigation around some of the myth busting around what we see, what's in the economy, and how best to respond. And as I say, within that, it's without doubt operational efficiency, not the knee-jerk responses of the airports. And I share that because you can picture that, and many of us will be well aware how painful that was over the summer. So focus on those things, and it is a 24-month bump in the road, of which we're nearly 5 and a bit months through, and that's the key bit to remember. I'll stop there, and if you have got questions, please, if I can't answer them now, just send me an email. Right, over to you, Rob.
Thanks, James. And that was fascinating. There is so much information and so many points for discussion packed into your presentation there. And I'm not surprised to hear that it's an hour-long presentation. I suspect it's probably a bit more than that, actually. Really fascinating. I've got a few things I'd like to ask about, but let's see who else in the audience might want to comment or ask questions. Serena, I see your hand go up first.
I just wanted to say a huge thank you for that, James, because although the whole world is very negative right now, and there is a lot of stuff to be worried about, you've actually managed to, within all that negativity, to actually focus on what's actually positive. So you've actually made me feel better. So despite the challenges ahead, seeing one of your favorite graphs there that showed obviously the lower times, but actually there is more growth to come each time. So we do have to almost all pull together and just get through this storm, and then we'll come out the other side. So thank you for that.
My pleasure. And that genuinely is the whole point of this conversation, that I think you don't know what you don't know. And I think some people will have been through recessions many a time, some not so, me included, the not so. And when I look through and look at some of the histories and lessons, actually it's not as bad as all of the headlines, and can guarantee stick on the 6 o'clock news in a bit. be something about the economy and something going out of business. The stories, but the reality is hopefully what I've shared. So no, thank you. I'm glad, because that was my aim. So I feel I've achieved that. So thank you.
Jane.
Well, I think that's being reinforced all the time by the businesses around us, which are actually doing well. I mean, there are new restaurants in Lymington. I've mentioned this before, but they're going places. They're providing a fantastic product and service, and people are going there. So even if they're going to go out less, they're going to go there.
And Jane, all I would say is your second point is spot on. That hospitality is the hospitality and furniture retailers, bizarrely, are the ones that are really going to be hit the hardest by recession, because it's a discretionary of, well, I can live without a new table and chairs, and I can eat out slightly less. So people make choices, and unfortunately, if you're a new business, you have a nice business plan, and you assume you'll have busy, effectively 7 days a week or whatever the plan was, and that's where it's dangerous to newer businesses. They haven't quite got probably the cash in the bank, and they've spent it all on new equipment and all those things, and you're right, they're the ones who probably need as much support as possible, because they're the ones that are probably in the most risky place of all of the things we talked about there. And I say that hospitality and some elements of retail, and that one of those graphs start to show retail in particular start to drop, and hospitality's been struggling since the end of August in terms of people making choices about how they manage their financial budgets.
But having said that, we are in a good area for that, from that point of view as well. There are a lot of people, let's face it, whose discretionary income is not actually going to reduce all that much. And I think we have to, because there's a lot of older, quite well-off people on good final salary pension schemes who are actually not that affected. And I think
I'd argue with you a little bit, Jane, and the only bit I would argue with is I think what people really do see is when their energy bills come through. So my parents are a great example. They're relatively well off, but when they got effectively a threefold hit on their energy costs, it's made them start cutting back and thinking about their costs. And I think the problem with energy, it comes through as a bill. When you in Tesco's and you might not pick up one thing as much, but the energy, and you're right, for people on living low wage, that energy takes up a much bigger proportion of the wage and really hits them. If you've got more of a disposable income, that shrinks a little bit, but not as much. And you're right, if you've got more lower paid people in an area, then it really hits them hard. But also, if your employees are all on a minimum wage in many of our hospitality industries, then they're looking for jobs elsewhere. So it's all an interesting one in the mix. Yeah.
I'm not disagreeing with you at all, but I think there's plenty of reason for positivity on the subject. Can I, while I'm in full flow, can I just say something? Because while you were going through your charts, it occurred to me that operational efficiency could almost include communications, because most of us could communicate better and more clearly and more focusedly what it is that we are offering. So I just chucked that one in there.
You had to get comms in there somewhere, Jane. Well done. Just quickly to interject, Serena's asking, are we all happy for her to take a screenshot of this meeting and to put a LinkedIn post up with people tagged in it? If anybody objects, stick your hand up. Looks like we're all happy. So carry on, Serena. There was an interesting discussion around hospitality, and I can't remember whether it was in this group last week, whether it was some other meeting I was in. It might have been an FSB meeting actually, around hospitality, where one of my contacts has said they'd been out to a mid to low end local pub at evening mealtime and found it absolutely packed with people who were trading down from more expensive venues, so they were really busy. One of the other participants in the meeting I was at said, "Oh yeah, but also actually at the top end, the top end high quality places also have got those people, you know, and it may be those on the fixed pension schemes, or it may be people who are you know, very high earners anyway. Those kind of venues are also carrying on doing well. So it's quite a mixed picture around hospitality, which is, you know, the sector we see a lot of in the New Forest."
And Rob, I think the important thing is, like, no matter how busy a high street is or whatever's happening, we are in recession. Recession is here. Even when Jeremy Hunt stood up in the Commons last week, the one thing he did confirm is we're in recession. So the bits that are sometimes open for debate is how long will it be, how deep it is, but we are in recession. It will impact different businesses in different ways, and some businesses won't notice any difference, some will. I guess the warnings are kind of every business needs to reflect on what it means to them. Next year, as in the whole of next year, will be a continued recession. So we're in very early foothills of recession. By the time a whole year goes through next year, we'll probably see more and more of an impact. So for those of you who think, oh, we haven't really seen an impact yet, it's probably more likely to come as we get past Christmas. I mean, even the Christmas adverts this year are much more subdued. That's done on purpose. They're trying to make it okay not to spend money, which I think is a really positive thing. But I think we will see when we get into next year that the impact of, it's quite a long recession and it will start taking its time. The financial crash was a massive dip, stop, and then starts to come back up. And so it's quite a short, sharp, painful, but this is kind of a bit of a slow burn, but when it starts to go on fire, it will take off. So I think that's the benefit of this sort of conversation. I think you can kind of get into in some sectors it's okay, and some indicators, which is great, because I think it's the useful bit of all of the sectors. And I'm doing a webinar for FSB in Southampton in 2 weeks' time on a similar vein. So hopefully Rob will have a similar debate again with a different group of individuals.
Indeed, I shall be at that one, James. Thank you very much. Okay, any other? Yeah, Jackie.
Thanks very much indeed. One of the things that I'm noticing is that, and actually I'm working with somebody in hospitality, is that they are so busy trying to deliver their product that they are struggling to take the time to step aside and actually look at their costs, because it's seen as a non-money making activity. So I think trying to get the message out to people that it is worth taking the time yourself, or somebody like you, James, or me, or whoever, talking to them to see if there's some help there, that actually people can point you in the right direction and allow you a little bit of brain space to be able to think about where your costs are, and how well you've managed them, or how well you are managing, or even how aware you are of them. Because I find a lot of people have got no idea. They've got no idea of their contracts. They don't know how long they are. They don't know what they're paying. So that's a really important and key point, I think. You're nodding, so you obviously know that.
I agree 100%. Jackie, it's amazing how when you say to someone, have you got a contract? They go, I don't know. Or I think we have, I'm not sure. And it's a great example of what some of my slides earlier on about. Take control and make sure you understand what's happening in your business, and particularly those people who, if anyone's gone into like variable rates on energy because they've just not got round to it, it's a bad choice, and they're the things that can happen. And Jackie's right, people are so busy they don't stop, and hence the benefit of sharing some of this today, just to hopefully encourage. Thank you, Jackie. I couldn't agree more.
Yeah, thanks, James. And in your little tile-shaped slides that you intersperse between the graphs, there were some really good points in there around the kind of things that people can think about in their businesses. And Jackie's point about people not stepping back and doing that kind of thinking because they're just so busy dealing with the incoming crises from all directions. It's a really important point. So yeah, there's so much that businesses can get their teeth into, and what you've said there, James. It's a really good message, and I look forward to seeing how it goes with my FSB audience in a few weeks' time as well. Okay, I think that's it for today. I'm now wishing I'd looked up who the speaker is next week, because then I could be telling you, but there will be a business support hour at this time on Wednesday of next week, and I hope to see you there. If not seeing you there, then we'll see you, I hope, at the Business Awards on the evening of 1st of December, where we increased the capacity that we can accommodate to increase the enjoyment factor, increase the number of people there. So that is the Business Awards for you. So thanks very much, James, for your presentation today. Thank you, everyone else. Any other last minute announcements?